Hey everyone, welcome back to another video. As always, we'll do a quick look back at the previous week before talking more about what to expect as we head into a new week and also a new month. So, July tried its hardest to keep the streak alive. As you know, a few weeks ago we talked about the streak of consecutive green Julys going back to about 2014. But ultimately, this July fell short by just about 10 points. So the crazy part is, up until the final minute of trade on Friday, SPX was actually still green for the month. But that last candle of the day took SPX into red territory for the month of July. And so now the consecutive streak is officially over. So if you remember also from my video a few weeks ago, I personally was pretty optimistic about July and the streak continuing. June ended on a pretty bullish note. These were kind of like the last few days of June right here, and we were looking to push towards all-time highs again. Even the first week of July it kicked off pretty bullish. We were sitting at the 75.80, just about 40 points shy of the all-time highs here early June. And then it kind of just all fell apart. The second half of the month, we had a little bit of chop, and then we just started kind of grinding lower. And I guess at some point, maybe halfway through the month, it really looked like that green streak, I guess, for July was in jeopardy. And ultimately, it did end up coming to an end. But last week, I guess, was also kind of full of surprises. Monday, we actually saw a huge reversal to the downside. So this is Monday's candle right here. Actually, Monday opened up pretty high. I think SPX was maybe up like 80, 90 points at the open, and we ultimately ended up turning negative on the day as well. So the week kind of just kicked off and set the tone for what to expect. So, Tuesday, Wednesday, we saw a lot of volatility as well, especially Wednesday after the FOMC meeting. We almost tagged the lower end of the expected move. And then I guess as they always do, dip buyers kind of stepped in and rallied SPX back 200 points in just 2 days. That was definitely a significant move and one of the larger moves we've seen in such a short time frame. For the last few weeks, we saw a little bit of that at the end of June, and I guess now end of July we kind of saw another big explosive move to the downside. So um, it's really interesting, I guess, heading into the new month on such a big, up move. A lot of momentum to the upside right now. 200 points in 2 days is pretty significant. I think for the week, SPX was up about 78 points. But most of that just came on Thursday and Friday. So huge shift on where we were on Wednesday at the close, looking like we were going to start testing these lows. On S&P. We know Nasdaq had already broken this level, but it really looked like SPX was getting there as well. But things turned around on Wednesday, Thursday. I think chip stocks, memory stocks, and even what's been going on in Korea had a lot to do with it, right? We saw a big rally in some of those big chip stocks, so I think that kind of just ended up dragging things up. Whether it's just a dead cat bounce in memory stocks or this is now a new sustainable rally, I guess we'll have to see. But it definitely sets up for some interesting trade as we head into the new month. All right, so looking ahead to next week, we have a 111 point expected move on SPX. So last week, I think we had like 146 or something point expected move. So it's come down a little bit, which is kind of to be expected. So VIX obviously also came down the last couple of days when we saw this rally. But last week we also had FOMC and a lot of the Mag 7 earnings. So it was kind of expected that the expected move, I guess, would be higher. Still over 100 points, so still slightly elevated on the expected move. So 111 points. The upper end comes in at almost on the dot at 7,600, and the lower end of the expected move is at 73.78, which is just about the low print from Thursday. So we're seeing that shift in the expected move again. So the last few weeks, if you remember, we were consistently seeing the upper end of the expected move staying either stagnant or, coming down, while the lower end of the expected move was also coming down. And now we're kind of seeing that shift back to the upside where the expectation is the one standard deviation move takes us only to Thursday's lows. But the upper end of the expected move, kind of pushes past some of these recent highs and almost comes to the all-time high level. So, if we saw like a uh, 1.5 standard deviation move, for example, or something, we would certainly be breaking this 7620 level. So definitely some upside bias coming back into the market. 7600 will definitely be the level to watch for if we start pushing up. There is a little bit of, some previous highs to test here around the, low 7500s, and then also this area around 7580. We've tapped this level a few times and fallen below. So it's going to be interesting to see how this week plays out. There's still some big earnings out there like AMD, SanDisk, Western Digital. These were names that maybe didn't matter even a year or two ago. But nowadays, these are kind of like the stocks that are moving the market. They may not have those, fancy 3, 4, 5 trillion dollar market caps, but they definitely have a lot of implication towards, AI infrastructure and whatnot. So those are definitely big names to watch for. So we could get a lot of movement, towards the end of the week once these names start reporting earnings. So definitely, still a week that could be potentially volatile. A lot still going on geopolitically, and then I think Korea is kind of a coin toss right now with the volatility that they're having. Right, some days they're down 10, 12%. I think on Thursday or Friday they were up 18%, and that's definitely been pouring into Nasdaq, and Nasdaq's been kind of taking SPX with it. So still a lot to watch for this week, but 111 points is the expected move. We kind of had a lot of momentum here towards the end of last week, coming up 200 points in 2 days. So are we going to see some follow through? How quickly, could we get to the upper end of the expected move? If this momentum continues, we've seen past moves with huge explosive upsides, right? Where SPX moves 300, 400 points in just a few days. So, is this a setup for another one of those? Does SPX kind of hit these resistance levels and just fall right back down? We kind of talked about it last week, where if you just look at, from the highs in, late May, early June, it's actually just been kind of choppy. SPX has just kind of been in this larger range of maybe 200, 250 points between maybe 7,200 and 7,500, let's say. Um, does that chop continue, or are we finally due for a breakout? Longer term, this kind of maybe looks like a little bit of a bull flag. We've been consolidating. Markets don't usually have like these V-shaped tops like we do, V-shaped bottoms, but is this a topping pattern or is just a consolidation pattern? I think that's kind of the big question right now in the marketplace. But that's a little bit further down the road, right? Just looking at next week, right? 111 points, and that's what we'll focus on. So 7,600 and 7,378. So looking into the VIX like we always do, we can see that VIX completely collapsed back down to close out this week. On Wednesday, we were testing that 21 level and we closed in the 15 handle on Friday. That's a huge reversal of like 25 to 30% in just 2 days. Has volatility really exited the market? Personally, I don't think so. We know that VIX hasn't been the greatest reflection of true market volatility over these past few weeks, maybe even a couple of months, right? It's been pretty subdued, pretty tame for the last few months. And we've had some spikes here and there, maybe based on geopolitical things or whatever, right, that's going on in the world. But for the most part, VIX has been pretty quiet since the start of this whole Iran situation, and really since the start of this year. VIX has been in the spring, summertime, just slowly coming down, and maybe the last 2, 3 months we've kind of just formed this baseline between maybe 15, 16, and maybe 18 or 19. But still, right, we're witnessing a historic crash in Korea, and while Kospi didn't really ever matter before, I think it does now. Some of the biggest chip stocks and memory stocks have been moving, 40, 50, 60%. I think SanDisk was down like 60% from its highs. Micron was down 40%, Intel is down 40%. And these were the market leaders in the springtime. And when we see stocks like that correcting 60%, I mean, that's a significant move. And even NASDAQ, I think, was down like 12 or 13% from all time highs. And VIX is still kind of just sitting around, the 15 level, right? that just to me just seems weird. Now, of course, right, VIX tracks the SPX implied volatility, and SPX has been pretty resilient to all this noise, but still, it just feels a little off. From where we were on Wednesday to where we closed on Friday is a pretty dramatic move. Um, and I think there's still a lot of unknowns heading into next week and beyond, right? There's still a lot of big earnings still to come, not just next week, but even Micron, Nvidia, AVGo. These are still some big names that still have to report earnings. Still a lot of uncertainty geopolitically, still a lot of uncertainty in these chip stocks, based on what's going on in Korea. So for the VIX to have fallen back towards, some of the lows of the year really just doesn't sit right with me. So, maybe this is just a little reset on VIX, and maybe it'll start climbing up higher and it's due for another bounce. But, for me personally, uh, just in this market environment, anytime the VIX gets, into the 15s or even below, I get nervous because, you know, VIX has shown us time and time again that it's going to spike and it's going to, bring volatility back into the market. It won't stay down for too long. So, the trend might look bullish right now, but just looking at VIX kind of makes me nervous. So just, something to keep an eye out on if VIX starts to climb again with SPX, like we've talked about hundreds of times. So definitely keep an eye on VIX as it, starts pushing back towards the lower end of this range. All right, and real quick, just the trade of the week. So, real quick on last week, the trade of the week actually worked out almost perfectly. I think by Thursday, you could have closed that trade for about a 300% profit, so you would have about tripled your money. But even on Friday, we closed within the expected move, and that trade was a profitable trade. So, as we've been tracking this for the last 5 or 6 weeks, whatever, I think we've only had really 1 week where it was a losing trade, and really that was kind of our fault that week that we lost. So I think maybe it was 2 or 3 weeks ago where, or maybe it was at the start of July. I think we got a little greedy and we purposely targeted just the upper end of the expected move rather than covering the full expected move. And well, it came back to bite us. So, um, funny enough, this week, the trade that I'm showing also doesn't cover the full expected move, which, as I just said, didn't work out last time. But personally, I think maybe I'm going to give this one a shot. Um, this week. My reasoning is, I think one of these moves to the upside that we're seeing is going to sustain, and we're going to see a little bit of follow through to the upside. So I'm not exactly targeting the upper end of the expected move. I'm targeting SPX being up maybe 40, 50 points for the week. So about half the expected move, kind of like we just saw this week. If you remember from earlier in the video, the lower end of the expected move is supposed to be 73.78, but the downside break even on this trade is 74.37, so just about 50 points higher than the lower end of the expected move. And the upper end of the expected move was supposed to be 7,600, and this takes us to 75.97 on the upside break even. So just a couple of points shy, just about there. So it's still a $5 wide diagonal where we're selling the 75.25 call for this Friday, and we're buying the 75.30 call for the following Monday, so August 10th expiration. So your break even is kind of right in between those. You're risking 285 on a one lot to potentially make close to 2250 if SPX was to expire right around that 75.25 level on Friday. But the idea with this trade this time around is not to hold it until the end of the week, just because we're not actually covering the expected move. But if by Tuesday, Wednesday, or even Thursday after some of these earnings, the market's up around this level, you can probably double your money on this trade by middle of the week. So that's kind of what I'm targeting for this week. I think just because of how much VIX has fallen, it's very difficult to do a diagonal this week that actually covers the entire expected move, because even though VIX is 15, the expected move is still over 100 points. And, our standard, 20 delta or whatever diagonal is not actually covering that full expected move. So, since we weren't covering that range anyways, I'm just going with a slight upside bias. So, again, not financial advice. Do your own due diligence. Make sure you understand this trade before you place it. But I did want to throw it out there. All right, and that does it for this week's video. Thanks again for tuning in and watching along. I really appreciate that a lot. And yeah, so this week looks like it's going to be another exciting trading week with some big earnings. I know SanDisk, AMD, Palantir are some of the ones that I personally will be watching very closely and maybe even participating in, depending on what the trades look like. So yeah, hopefully it's a great week for everyone and we see some great volatility. Thanks, guys, and good luck with your trades.